Welcome to Stock Talk. This is your host, Scott. Hope you had a good weekend. I've had a pretty busy weekend. Thought I'd get back on here Friday night, but was not able to. But I wanted to spend some time with you tonight and just kind of talk about the market, where it's at, and that kind of thing. And just wanted to focus on a stock tonight, Novavax. That's the one I've been selling a lot of. I've had some people talk about, well, you should have held on to all that Novavax. Well, I've been selling a lot of it for a reason. I want to kind of give a history of Novavax and show you why hogs get slaughtered. That's the saying. The pigs get fed and the hogs get slaughtered. And I want to show you some prime examples of that with the history of Novavax. And when people say you should hold a stock just because it's continuing to go up, that's not always true. And I'll show you why. And so there's a reason why I sell stocks, when I do. And it's because I'm a pig. I'm not a hog. And I want to show you what can happen if you are a hog. Okay? So let's jump into that. First, let's just take a quick look at our portfolio, and then we'll take a look at the history of that Novavax. But let's go ahead and take a quick look at our portfolio first. Did add some things. We'll talk a little bit more in detail about that, maybe some other video, but added, with the market down again, I started buying some more things. Added something called SPY, that's the S&P ETF. Didn't add any more GBTC, or added a little bit more QQQ and VTI, I think I did. Actually traded a little bit of Novavax again Friday. Bought some, sold some. And the other ones we pretty much left alone for now. So that's kind of where we're at on that. But let's talk about this stock called Novavax for a second. I want to pull up a chart for you. And let me get to that chart for us here. This is Novavax here. This is a history of Novavax. If you'll look, you'll see that we've got a history from 2010 all the way to 2019. Now, I want you to remember that this Novavax did go under a 20-to-1 split. So these prices that I'm quoting you, a lot of them will be prices prior to the 20-to-1 split. It's kind of been recalculated to reflect that 20-to-1 split. So let me just give you an example of that. At this area here, we see a price range of open of $122, the high of $127, and the low of $120, and the close of $121. Well, Novavax share price has never really been that high. You got to divide that by 20, okay, to get the actual price at that time. So $120, what would that be? If you divide it by 20, it's about $6 a share. But this has been converted because of that 21 split. So I'm going to use those numbers, but always remember that these should be divided by 20 until we get to this post-split era, okay? But I want to show you something. Just kind of give you an example here of, this is back in 2012, getting close to 2012, or somewhere in 2012, it looks like, close to the mid-2012. The price range, that was, let's say January, March, April of 2012, price range of about $24, $25, okay? Let's say you were a good investor. You saw that this was a low, and it was on a downward trend. You said, well, I think I'll go in here since this thing is no longer up here where it was $50, now it's 20-something, and you got confidence it's going to go up. So you come in here and buy this around $24, $25, okay? All right, so it doesn't take you long, and this stock has gone from that 25 up to $40 a share. Okay, now that's a pretty good gain. If you look at that, 25 to 15, that's a pretty good gain. So my strategy would be, I would have probably sold somewhere in there. Okay, because if I'm getting somewhere close to 50% gain or whatever, you've gone here from 25 to 40. Let's say it was 20 to 40. You got a pretty good gain there. That's 100% gain. So why not take your money? Okay, because why? Because pigs get fed, hogs get slaughtered, right? So But no, you know, you're a genius and you're a hog. Okay. So you're going to hang on to that because you know it's just going to keep going up. And guess what? You're right. It keeps going up. And now your stock over. Let's go up down the line a little bit from, you know, you're about a year later here, a little bit over a year later. All right. Now this $20 stock that you got's gone up to about 60 something. Okay. So you got a triple. Okay. But you're a genius and you're a hog. Okay. Because you just know this is going to go up. Right? You just know it's going to go up, so you're going to hang on to it. Or you've got a strategy like a lot of older folks did, that bought a stock, put it in a drawer, and never worried about it again. Okay. And then they leave it as an inheritance to their grandchildren or their children. Okay. All fine. That's your strategy. But not my strategy. I like to buy low, sell high. Okay. This strategy of this person right now that we're talking about, he's the buy low person. Okay. He did a good job of that, or she did a good job of that. But the second part of that equation is missing. They haven't sold a thing. Okay. So how much money do you make when you don't sell anything? You make zero money. Okay. All right. But he's looking like a genius. Okay. So they hold on to that stock, and that stock just keeps going up and keeps going up. And boy, now you're talking about a $20 stock that they bought is now $122 a share. That person has got to be a genius, and for sure is a hog. Okay. So they have got to be a genius, man. They're telling everybody, I got this stock I bought for $20 and that's $122. I'm a genius. I'm a genius. All right. Well, you give it about what? Let's see here, another month. Well, they're not quite the genius that they were, right? It's now gone from that 120 or so back down to $79, $80. And they're not telling a whole lot of folks about how smart they are. Okay, that's kind of on the down low now, but they're still a smart person. They've got a $20 investment that's $80. So not a bad deal, but you know they're going to hold on to it because they just know it's going to keep going up, right? So it just kind of flounders around here for a little while now. Is at this whole time, what's happening is your time is passing. So you've gone from 2012, you're in 2014 now. So you've had this stock for 2 years. All right, it's up, but you haven't sold anything, so you haven't made a dime in 2 years. Okay, but the value of it is up. Okay, so you're not doing bad. You got something that's a lot more valuable than what you had two years ago. So okay. All right, so you're holding it and you're holding it again. And here we go again. It gets on a tear and it runs up here. And guess who's a genius again? And they're telling everybody at work that they're a genius and how smart they are and everything. Okay. All right, but the same thing happens to them again. Uh-oh. You know, it's dropped again. It went from here up in this $200 range, 210, almost as high as 210, back down to here. All right, so now it's back down another $40. But I'm telling you, they look pretty smart because they're sitting at $160 and they paid $20 for it. So they still look pretty smart and they can still tell everybody how smart they are. But they haven't sold a thing. Okay? And they're still a hawk. So they're holding it, and it gets way up to here. Now, you tell me they don't look like a genius. They're sitting from right here all the way from down here. A $20 stock is now gone in just a matter of almost 3 years to $242, $240. Right? That's a pretty good increase, right? So they look extremely smart. And they are extremely hoggish because they're up from 20 to 240, but they haven't sold a thing. Now, let's go here. This thing runs all the way up to almost, well, it does, to $300. A $20 stock that they bought is now $300, and this hog is still holding that stock. Okay? Okay? Or let's take the person that's really not a hog, it's just the way they were raised. That stock is sitting in the drawer. Okay? You got a $20 cost average stock that is sitting in the drawer for $300 a share now. All right, that's great. But what's the saying here? The saying is, pigs get fed, hogs get slaughtered, and geniuses go away. I'm gonna tell you that right now. So what happened here? This drops. Look here, from 300 all the way down to here. That's back down to about it's about $130 or so. But guess what? That's still a $20 stock that they bought. So they can still call themselves a genius. It's 20 to 130, and they've had it for 3 years. It's not a bad return. And actually, they held on to it, and it kept going back up again. So they're smart again, right? They're still smart. They're getting up here, and it's $171 or so. So there's nothing wrong with that investment of $20 all the way to that. In that time frame, you got to keep the time frame in mind because you've got compounding interest on gains that you buy and sell, or interest. But you haven't made a dime until you sell something. So they're sitting there and they're looking pretty good still. But look here, we got a drop. We got a drop all the way back down to $100. So now you're getting in that time frame thing that says I've got $20 I invested almost 4 years ago now that's worth 100. Okay, still probably not a bad investment. If you can turn 20 into 100 in 5 years, 4 years, what is that? 4 years? That's still not a bad investment. All right, so let's follow the history here. They are still a genius. They're still a hog because they're still hanging on, but they haven't got fed. All right, so here we go. It's going up, going up, going up, going up, and they are looking good again. They're still a genius. They're still smart. They're still a hog, and everything's good. That's about $163, 160. So everything's good there, but look here. In a matter of weeks, they go from $162 down here to this. That little spot right there. $29. Now, a $20 investment they haven't never made a dime on is now worth $29, and they've had it, let's see here, 4 years. 4 years, and it's gone up $9. Not still bad. You look at the percentages. That's not terrible. Okay, but they could have and should have pocketed a lot more money than that already. They've had opportunity after opportunity after opportunity to pocket money. All right, so, but they held on to it. They're still a hog. They're not so much a genius anymore. They're not a bad investor. I mean, they're still making money. But they hold on to it, and it gets back up here, and they still don't sell. But it just comes back down to that same spot, and then now we're even lower. Now we're down to 15.20, and it's almost, let's see here, 5 years now, getting close to 5 years, and they haven't made a dime on their money. Not only that, that $20 investment is now 15.20. Okay, 15.20. So now they've lost money and had this money for 5 years, and they haven't made a dime, and they're actually losing money now. All right, and they're losing from 20 to 15, which is, what is that, 25%. They're down 25% after 5 years. Okay, they're no longer a genius. They're no longer a good investor, but they're still a hog. They're still a hog because they haven't sold a thing. Okay, so they don't learn their lesson, and they keep holding this, and they hold this, and they hold this, and they hold this right here. And this thing gets up to here, and it's about a $50. It's a $50 share now versus a $20 share. And that's a double. It's, let's see, 2012, 2018 almost. 6 years, and it's doubled. That's not a bad investment. Okay? If you can double your money every 7 years, that's not a bad investment. That's pretty good. So, I mean, I'd take that all day long to double my money every 7 years. but they're a hog. Okay, they're a hog. They're not talking a whole bunch anymore, telling about how smart they are, because everybody knew they had this stock when it got up to 120, and so they're not talking a whole lot about it at the water cooler. All right, but they are a good investor at this point, because they could double their money, but they don't. They're a hog. All right, so it goes down to here. It's back down to 25. They're still making a little bit of money, but the time frame is so long now. It's not that great of money, and it goes up and down. They still don't do anything. They're back here to the 44 level on a $20 investment, and they're 5 years, 6 years down the road now. Still not a bad double, not a bad double in 6 years, but they don't sell the stock. Okay, you should have held the stock. You should have held the stock. Well, they've held it now for 7 years, 6 years. I mean, and look what happens. Boom! It falls all the way down to here. You see that little tiny, tiny bars down here? That's where it's at now. And now this $20 stock that they've had for almost 7 years is worth $13. Okay? And you want to get it even worse, go down to these little bars here. This $20 stock is now worth $5. All right? So this hog has now officially been slaughtered, because they're either sitting there on this investment that's not made any money for that long period of time, or they're going to sell it. If they sell it, they're slaughtered, because they've lost money. They didn't make a dime on that money. They've lost 75% of it, and they had a chance to make all kinds of money at different times. Let's go back and look at that. If you were a pig here and you got fed here, right? You could have bought somewhere in here and got fed here. And by being get fed, I mean you sell. You know, you're a pig here somewhere in the middle of this run. You sell up here somewhere, you get fed. All right? You watch this stock for a while, it drops down, you buy down here, sell up here somewhere. And you just do this on and on and on. You buying and selling, buying and selling. Now what can happen to you, and what did happen to me, is I made some good money on this stock, buying and selling from, it was 2016 to 2018. Made really good money in 2018 on it. And sold it out, I'm talking about near the top, very close to the top, in 2019. Started buying back in 2019. Now, started buying back in. That does not mean I had a full investment in it. Now, but what happened was, as I was buying in, some news came out on one of their tests, the RSV, that did not come out too good. So some of this stuff I bought up here got caught in this downfall. So now you got some stocks here that are sitting at that time it was $2 and something. The price they have on here now is $43. So that $2 and something, $43 stock, whatever you want to call it, because of the 20 to 1 reverse split, now has dropped down here to this level here, 13.56 or so. So you get caught with some of these shares you bought up here. If you believe in the stock, you buy. If you believe in the stock, that's the key. If this is a stock you're just trading, you don't know a whole lot about it, you don't know the history, you don't know they're working on some things that might get them back to these levels here and higher, then you probably wouldn't do this. But I follow this stock for many years. I've been trading it since 2016. Probably started buying in 2015. So I know a lot. I've been watching it a long time. So I had confidence in this stock, and I bought. This is where it fell to. Then it did talk about the reverse split. It even went down further, and I've cost averaged all the way across here. So I ended up with a pretty decent share price. All right. So I'm waiting on the news for the nano flu test. That's the next big news. Should be coming out any day. Okay. But what happens in the meantime? In the meantime, you start getting some news about a virus and a fast path. And so this is fast path, and it goes up to here, you know. And then they announce a shelf offering, and it goes down again a little bit. But the virus news is still around. And this thing is running like crazy. The more they talk about this virus, the higher this thing goes. It has nothing to do right now with the nano flu. So I'm not expecting this. And so the nano flu news could come out any day, and we could have another situation like this. All right. And so I've got to reduce my risk now that it has run up so high. I was willing to take the risk down here. Okay. I was willing to take the risk down here. But once it got up to here, I'm not a hog. Okay. I'm a pig. Now, I don't want to get slaughtered again. Okay. And I got slaughtered here. Well, I didn't really get slaughtered because I cost average, and now I'm getting fed because the stock has gone up so much. So I'm not greedy. I'm taking that money, selling those expensive shares that I had way up here. I'm selling them for a loss, but the ones I'm holding now, these here are cheap shares, and now it's way up to here. These, I bought as low here, $4.50, and now we're holding shares that are $16 a share. So you're talking about a 400% gain on these shares I'm holding now on some of it. All right, so, but I'm not a hog. I've been selling those shares for a while. I've been selling them for a 100% gain, 4 and 8. I started selling at 8, 9, 10, 11, 12. I've been selling them the whole time because there's no need to get greedy. If you got a 100% gain in less than a year and you don't take that, shame on you. But you may look like a genius if you hold on to it up here and then you sell it up there. That wouldn't be a bad thing. But what folks do is they do this other thing, right? They do this other thing. They do this. They hold it. They hog, and they just hold it and they hold it and hold it, thinking it's going to go up forever, and it doesn't usually do that. And so what happens is you get caught in situations like this, especially with these pharmaceuticals. So, you can always look in hindsight at things. Hindsight's easy. It's 2020, but you can do that all day long. Everybody can be a genius looking hindsight. So the best thing to do is to have your strategy. Always have your strategy. Don't be a hog. Make your money when you can make your money, especially if you can make your money within short time periods. Why not? Go ahead and take it. We sold some of this the other day that we bought, and within a week we made 7% on the money. And we sold it because we made 7% in a week. Compound that sometime. See what kind of return that is for a year. It's a lot. So we don't sit here and worry about whether a stock's going to keep going up or whether you sold it too early. If you're still holding that many shares, you'd have this much money. I mean, you can't worry about that. You've got to have a strategy that you're going to be satisfied with at making money. My strategy as a retired person is to beat a CD, to beat the market. The market's going to average pretty good, and you want to beat that market. And my strategy really is now to make the money last for the rest of my life. So that's my strategy. You might have a different strategy. If you're young, you might be a little bit more hoggish, okay? But if you're somebody like me, you gotta be smart with these investments and not get caught in these downfalls because you're greedy. You got a goal in mind to stay retired. Okay, so that's my goal. I just wanted to go through that, just kind of show you that you always hear people say, well, if you still had it, man, you'd have $4 more a share or $10 more a share. Don't worry about that. Just invest, have your strategy, and get in and out. That's my strategy. I've seen too many of these stocks. I'm talking about great companies that have gone way up and then come back down, never to recover again. And it will make you sick if you were holding it way up there at the top and you get out. And just because you thought it was going to keep going up. These things don't go up forever. The market don't go up forever. It goes up and down. So play those up and downs, and you'll do good. You'll do good. All right. So let's jump over to take a look at the futures and see what's going on in the market. So let's do that real quick, and then we'll close. So the stock market was rough last week. Because of Novavax, though, I actually had a decent week. So And that's one reason I'm selling too, because man, if we can get through a week like last week and have a decent week, oh, that's a blessing. So we took it. Um, Looks like, now I looked right before I started the video. Let's go ahead and refresh this because uh, before I started the video, we were in the red. But here we are. The reviews, they reverse here, indicating a positive open. A while ago, everything was red. So, and the message was it's going to be a rough start to the week. So you can see here, this thing goes up and down. You know, well, look at the daily. I mean, it's going up and down too, right? Every time you turn around, it's going up and down. So let's just take a quick look at Asia too while we're at it. Asia's in the green, 0.25% or so. Shanghai's up over 1%. That's not bad. So they're in the green. Oil, let's check oil real quick. Oil's in the green. We'll take that. So we're going to, looks like possibly start out with a good day. But it's going to be choppy. It's going to be choppy. I expect it to be choppy all week. It's going to be up and down probably. But I think, you know, as things settle down here, this stuff will start easing back up. We've made some good ETF purchases while this thing was down. This thing got down 10, 15%. So that may be the end of it. A couple of years ago, we had about a 20% drawback. We might get that. Or worse if this virus keeps going. But right now, look for things to settle down a little bit as long as the virus is not getting too bad. But been a good time talking to you tonight. I won't let you go. Sorry I wouldn't be able to get back on here on Friday night. But we'll try to get back on here tomorrow night. Or maybe, no, it'll be Tuesday night before I can get back on. So we will get back with you on Tuesday night. In the meantime, be careful tomorrow in that choppy market. Appreciate you watching the videos. Got another subscriber. Appreciate that. Thank you for that. It's Rob, a good friend of mine. Appreciate that, Rob. And so we'll see you. We'll see you Tuesday night. And please don't forget to subscribe if you haven't already. Click the like button if you like the videos, and share it with a friend. Thanks, and have a great night. Bye-bye. To subscribe, click the button in the right-hand corner. Thank you.